Craig, let's talk about using a loan broker as the person in the middle. I'm sure there's a tendency for some people to say, okay, I've got $1 million, and why would I deal with a broker when I could maybe find the person to borrow directly? And you can see where their head is going, because in a real estate transaction, when you sell the property yourself and don't hire a broker, there's actually a tangible figure. You can say, I just saved a certain percent.
Right.
But it's interesting, in this business, it doesn't happen.
Yeah, it usually doesn't equate. I mean, you can, interest-wise, I think you're going to make as much interest using a broker. And I've just seen it over the years, and once again, we've talked about dozens, if not hundreds of examples where people trying to make decisions on their own, they just don't know what to look for.
Well, daily we get multiple applications for loans.
Right.
I mean, up to 5 a day. So we are getting avalanche with people wanting funds, and part of our system differentiates, and we'll talk about in a little while, but we differentiate who should be able to borrow and who shouldn't. That pipeline has taken a decade or more to create, and that's not easy to replace. And we also have the largest capable borrowers list in California waiting to find their next deal and call you with the funding. Right. So if somebody invests in our trust deeds, they're adopting a team of borrowers and capable people already in place. That is not easy to replicate.
No. Usually people that try to go out on their own, they're actually not, they think they're finding the borrower,
right?
But the borrower is actually finding them.
That's right.
Because they can't get it at somebody that's going to qualify them. So it's kind of reverse of that.
That's interesting. You've always been very good at finding out why somebody just called you.
Yes.
And those calls do come in where it's just sort of out of the blue,
right.
And somebody we haven't heard, and you try to get to the bottom of, okay, why are you calling us this time?
Right.
And there's always a sequence of denials, and we find out usually, oh, it's got a cracked slab, or you're behind on everything else with everyone else.
That's exactly right. A lot of them have been borrowing from another lender that's cut them off,
right.
Or
and
the property doesn't make sense.
Yeah, and if you're just doing it by yourself, you wouldn't think that way. You would just think, okay, I just found a good borrower.
Right.
And it may not be. Now, one other point that we just barely touched on is that usually the yield on the trust deed actually can't be as high as if you deal with a broker, because there's a ceiling. And so
right.
You deal with usury if you deal with a loan that's too expensive in interest, and with a broker that's not a problem.
Exactly.
Okay. Let's talk about the broker side of it again, as far as what we bring specifically to the business that others might not. I'm going to mention just a couple of them first and then ask you a couple of questions. One, we really do understand business cycles, and that's real important in real estate. Right. We understand the real estate cycle. We know when we wouldn't do certain types of loans. We would pull out of that market and say, that's too dangerous. So, certainly 2 years, 3 years ago, we would say, we're not doing construction loans. We're not doing manufactured home loans. Those were really right. good decisions.
Right.
The lenders that made those loans certainly ended up having problems, and they may not have been able to see them coming, and that's real important. So knowing cycles and writing reports on that is a big advantage. We're also real estate investors ourselves, so when we go appraise a property, we have a 30 years of experience and thousands of properties under our belt. We know what we're looking for. We know how to protect not only the borrower but our trust deed investor from loaning on something that they probably shouldn't. Now, some brokers might not have the outreach we do, so they pool money.
Right.
And let's talk about the idea of pooling money. So that person with the 25 grand who can't find a home with right. us says, well, I'll just join in with 20 other people and make a pile of 500. What's kind of wrong with that?
Well, I think the problem with pooled money is you just don't know exactly where it's going to go. It gives the broker almost complete discretion on what to put it in, and where you might be able to do a $500,000, say, land loan at the wrong time.
Right.
If that's one individual looking at that land loan having to make that decision, they would probably pass on it. So I think it just gives them too much discretion on where they put the money.
Okay. What about payments being made? We have a monthly payment demanded of each borrower every month, but there's yes. companies that do straight notes where that's not true.
Yeah, one of my philosophies has always been, I think, if they're making payments on a monthly basis, it's encouragement, one, for them to realize, okay, I got to get this thing sold. Mm-hmm. I got to get it fixed up and sold. And two, I think they're a little less likely to get over encumbered, because when you're writing a check every month for whether it be $2,000 or $10,000, you pretty much know when you've hit your limit.
Yeah, and it's
you
real
better stop.
And it's real important because we, with experience now, we've been at this for 14 years under the Norris Group, and you had plenty of experience before that. Is one of the things we've noticed is somebody that has really good skills finding deals, but not too much behind them, without a payment, they could bury themselves inside of 6 months and then go,
Right.
wow.
Yeah, it's real. People don't realize how easy that is to do. I think that's one of the most common calls that I get. I just try to let them know that, I mean, you'd need a lot more money to do this.
Let's assume that we're not dealing with an audience that's real familiar with trust deeds. First and second position, what's the big deal?
Well, first of all, the Norris Group only does first trust deeds. And what a first trust deed is, if it's recorded in first position, so if that's for $100,000, then if you have a second trust deed behind that, it's recorded behind it, say for $20,000. If the person stops making payments and you have to go into foreclosure, the first would automatically be in line to get money first, and the second would either have to start making payments to the first or hope that there's enough money to pay them off at the trustee sale once the first gets their funds. So,
but they lose control. The second
they
is a
totally
little bit
lose
out of control.
Yes.
And usually they're the smaller amount and they're behind a bigger amount. So let's say in that example you used, the 20 grand second is getting maybe a $200 payment, and all of a sudden looks up and has to find out that he has to make up a $1,000 payment.
Exactly.
Multiple months.
And it kind of goes back to a point we made before. That's one reason why the $25,000 investor maybe isn't right for the Norris Group, because we don't want to put them in a second or a smaller loan.
That's right.
Where a lot of them will find other companies that will take smaller amounts, but a lot of times that's because they do seconds, and we just prefer to only do first positions.
12% program or 9% program, both of those numbers might sound very high to somebody that looks out to the world of 5% interest rates.
Right.
But in the hard money world, there's yields that are even higher. There could be an 18% yield. So
absolutely,
if somebody said, hey, I've got a trust deed at 18%, what might be wrong with that trust deed?
Well, that would just be a situation where you have somebody that has to pay 18% just to get funded, and they're just not qualified probably to borrow money. They probably don't have the assets to protect it. It's just the risk. People have to understand that, like, risk is always associated with interest rate. So 18% is going to have so much more risk than, say, 12%.
And that property might have problems that aren't really solvable. So you might have a mold house.
Right.
Or there's a reason usually that yield is too high.
Absolutely.